paying off debts, I think, is the best way to maximize your money right now. Because they're charging you, like I said, upwards of 10 to 14% on credit cards.
Right.
If you've got a balance on your credit card and you've got savings, you got to look at what you're saving there, and pay off your debts if at all possible. I think the way I would approach things.
Being a business owner myself, when I initially started looking into ways to save money, retirement, and this, that, and the other, I had no idea the difference between a 401k plan and an IRA, a Roth IRA. All that information was foreign to me. I'm sure there are viewers today.
Traditional IRA is you get taxed at, your tax benefit is now, and you pay taxes when you pull it out. The way, I'm not an accountant, but in a Roth IRA, I think you take the tax benefit now. You take the tax liability now. It's after-tax income that goes in, and you get the tax benefit on the backside. Is the way I understand it. A lot of people have converted traditional IRAs to Roths, bit the bullet again, and taken that tax liability now while they can, and so they won't have it on the backside. And then self-employed people have SEPs, self-employment plans that they can set up.
Right.
You need to get with someone that you trust. You need to take a real candid look at what your finances will allow you to put in there, and if you've got employees, figure out how to make the plan available to them if at all possible, and then figure out what you're willing to match as a self-employed person. And but if you're an employee like me working in a company, again, you got to figure out you 401k or IRA. And I don't know, I'm not certain you can do both, but
yeah, I don't think you can do both.
Yeah, but 401ks have replaced the traditional pension plans, which we've heard a lot about recently in the news, and but state, government employees get the benefit of long-term retirement pension plans.
Yeah.
They hope anyway.
They hope they will.
Yeah, but sometimes they're not fully funded. We've been talking about that with the city. They're having issues funding their pension plans. So the money doesn't come from it comes from somewhere.
Of course.
It's going to come from taxpayers and the government. 401k is going to come from employers, the market, and the individuals. So but you just got to figure out where you want to go.
Right, right. Well, Gary, we certainly appreciate you stopping by Perspectives on today. You've
Are we
given
done?
us some really good information. Yeah, we're done.
That went by just like that.
We're really done. Stay tuned. We'll be right back.
When your loved one gets sick, you want the best possible care for them. When we found out our baby Chloe had a tumor, our first and only thought was CritterFixer. The doctors, the staff, they're wonderful. She received the best possible care before and after the surgery. The technology is state-of-the-art, and they're always happy to see her. We know she's in good hands. It's no wonder their 2 locations were voted the best veterinary hospitals in Peach and Houston County. CritterFixer, where family comes first.
If you just joined us, we're talking about financial management. The first segment, we talked about credit repair, we talked about foreclosures, we talked about Roth IRAs, 401k plans, and individual retirement accounts. Now we're going to talk with a certified public accountant. Let's welcome Rudell Richardson to the show. Mr. Richardson, let's get down to just the basic essentials. Let's just have a powwow between you and I. Listen, what is it best to buy a new car, a used car, or is it best to lease? Give us your take on that.
Well, I think basically you have to look at what your finances will allow you to do. And generally, when you purchase a new car, oftentimes it's more expensive than going out and looking for a used car. Personally, I've always told myself that I'd probably never buy another new vehicle. I'll look for something with a low mileage and something that I think will carry me where I need to go. But then sometimes you have to look at what kind of interest rate is being offered on new vehicles. There are different automotive dealerships and manufacturers that are offering 0%. And at that time, it might be worth considering purchasing a new vehicle. But sometimes individuals buy vehicles new for kind of a status symbol.
Right.
But for me personally, again, I don't have a problem with that. I'll purchase a new one or use one. But particularly if the interest rate is 0%, I'll consider it at that point.
Okay. In the last segment, we talked with Gary Bechtel about home ownership. what would you recommend, or would there be any benefit as to buying a home or renting a home? What would be better?
Well, again, you have to look at your finances. If you have the funds for a down payment to purchase a home, then consider purchasing one. Of course, another advantage of purchasing a home is that you potentially can deduct the interest on your tax return, which eventually ends up with the tax savings as far as your tax liability is concerned. But when you purchase a home, an owned home, as you know, you have other situations that you have to deal with, such as maintenance.
Of course.
Generally, when you lease a home, then you don't have to deal with that.
Right.
You have your landlord usually takes care of that for you.
Right. Okay, let's just kind of kick it a little bit with some healthy tips out there. A question that comes to my mind, and when I'm talking to my friends in our circles, we're talking, is it beneficial to borrow from your 401k plan or from your retirement plan? What's your take on that? Should we do it? Should we not do it?
Well, if you're in a crisis situation and you need funds, you have two options basically. You can either withdraw funds from your 401k plan and not pay it back, but of course that has tax consequences. And just for example, if you're in the 28% tax bracket and you borrow money from or you withdraw money from your 401k plan or your IRA, then you could end up paying not only the 28% federal income taxes, you also pay a 10% penalty, which takes you up to 38%, and you kick in your state at another 4 or 5%, you're looking at paying roughly 40 to 43% taxes on that withdrawal. So from that
seem
perspective,
that's beneficial at all.
Right, yeah, from that perspective, you might want to consider borrowing
Right.
from your 401k plan and paying that money back. And it's my understanding when you pay that money back, though the interest that you're paying actually goes back into your account.
Okay, okay.
So basically, borrow the money as opposed to taking a withdrawal and not paying it back.
Okay. I know it's tax time. Let me ask this question. There are a lot of companies out there that do the refund anticipation loans. I have a lot of friends who go one day and they have their money in 24 hours or 48 hours. Should we do that or should we not?
Well, first of all, just to let you know, I'm not an advocate of refund anticipation loans. And for your viewers, basically what a refund anticipation loan is, if you are anticipating getting a refund, then you can get a loan against that refund. And what your preparer would do, have you sign a series of documents. The preparer actually doesn't loan the money. They have a relationship with banks that actually will loan the money to the taxpayer. And when the refund comes back, the refund actually comes back to the bank, and that's how the banks get their money back. But the problem with the refund anticipation loan is that the amount of money, fees, the interest that you pay is just phenomenal. And generally speaking, the persons that usually get those refund anticipation loans are usually individuals that are in the lower income bracket. And these are the people that are less likely to be able to afford to pay those kinds of fees. So it could cost you hundreds of dollars just to get those refund anticipation loans. But what a person can do is, as long as their return can be filed electronically, these individuals can get their refund back in 10 to 14 days, particularly if it's deposited into their checking account with no extra charge, or the fees will be substantially
Saving money,
less.
actually.
Absolutely. It's all about financial management.
So now, how can you, since we're talking about taxes, how can you prevent yourself from being audited? Or if you are audited, what are some tips that you would give someone who received a large refund, and then now the IRS is saying, okay, we question that, we want to request some documentation?
Okay. Well, first of all, anyone can be audited. But there are some things that one does oftentimes to enhance the chances of being audited. Number one is that if you're earning, for sake of example, if you're earning $30,000 a year and your charitable contributions comes up to be $10,000 a year, then that might be a flag to the Internal Revenue Service. But I think what one has to keep in mind is that if you are audited and you have kept good records, then you don't really have a whole lot to worry about.
Right.
And generally, if you are audited, then your tax preparer can oftentimes assist you with the audit process. And now, Internal Revenue Service are doing a lot of what's called the desk audit, where they don't actually come to your place. They will write you and ask you to send in different information to support the entries that's on your tax return.
Okay.
So it's important that whatever entry that you put on your tax return, you need to have written documentation for it. And let me just throw this in also, particularly when it comes to charitable contributions, and a lot of persons don't know this, is that when you contribute to a charity, and if you write a check to that charity for $250 or more at one time, that check then becomes not enough support in case of an audit. In other words, if you are audited and the auditor asks you, support this entry on here, you give them a check, a canceled check, they're not going to accept that.
Right.
Really what you need is, and what they're going to require, is a written acknowledgement from the charity, such as the church, for example.
Right. Okay. Now, let me ask this question. Adjusting your withholdings. Now, I'm not going to call any names, but I know some individuals who the first half of the year, their withholdings are different. And then by the second half of the year or the last quarter of the year, they adjust their withholdings in order to, I guess, make more money throughout the beginning of the year. Is that important to stay away from, or what's your take on that?
Well, I think the bottom line is if you have had sufficient amount of withholdings taken out of your pay for the entire year,
Right.
You can do it at the latter half of the year, or you can do it at the first half of the year. It really doesn't matter, but you need to have, in the end, you need to have sufficient withholdings taken out. But there are instances where there are individuals that might decide, well, I want to pay my taxes in at the end of the year, but then at the beginning of the year, they get to enjoy the money, the extra money that they're receiving, and sometimes they just neglect to have those extra withholdings taken out at the end of the year.
Right.
And consequently, what happens, you end up paying some underpayment penalties, which can be pretty stiff.
Yeah, they can be. Let me ask this question. What are some things that the normal layperson may not know that they can deduct on their taxes? Just a couple everyday items that you can share with our viewers that they can use as a tax deduction.
Well, one thing would be medical mileage. Any mileage that you incur going back and forth to your physician to pick up prescription drugs, those miles are potentially deductible. Mileage as far as charitable, mileage that you go back and forth to the church, for instance, if you are providing volunteer services to the church, those miles can be deducted as well.
Wow, I didn't know that. That's some really good information.
Right.
Really good information. Rudell, we want to thank you. And by the way, Rudell Richardson is my personal certified public accountant who keeps me in line. We just want to thank you for joining us on the show today. We appreciate you. Look to have you back in the future. You might be having some financial difficulties, but there is hope. If you follow today's strategies, it will put you on the road to debt-free living. If you have any questions concerning today's show, just log on to our website at perspectivestv.com. Thanks so much for sharing with us on today. Here on Perspectives, where you're not only informed, but inspired. Make sure you tune in next week. See you then.